Hello and welcome to another morning briefing presented by Stein Investments. This week was fully covered by central bank events, starting with the Bank of Japan, then the Fed for the US dollar. Today we had the Swiss National Bank for the Swiss franc, and later on the Bank of England will follow and announce their official bank rate for the British pound. All this had an impact to the trading activities and the market volatility of this week, and we'll focus on the affected currencies. I can disable the British pound as well because it hasn't been affected yet. So what remains for the moment is the US dollar, the Swiss franc and the Japanese yen. And you can clearly see that all these central bank news events had a big impact on the corresponding currency. If we start with the Japanese yen, which was the first one this week, there was the announcement of the new monetary policy from the Bank of Japan, and it caused a massive spike to the upside. This equalized during the day because they didn't change anything at all, and so the market overreacted in the first moment and then calmed down, keeping the Japanese yen at a very neutral level here for most of the time. But this is just one example where you can see how these news events affect the underlying currencies. The same is true for the US dollar, which has been here announced. So the Fed announced how they will continue with their monetary policy, and there has been an immediate drop, keeping the US dollar pretty low for quite a while until the Asian markets reacted on the news and especially on the statements from the board from the Fed, which announced that they will step away from further interest rate cuts because of economic uncertainties due to the tariff policy. So it's highly unlikely to see any rate cuts during the next months in the US dollar. The last event for now was the announcement of the Swiss National Bank for the Swiss franc, and you see the same pattern. It's been here with this fake up move, I'd say, and as soon as the news came out, it dropped quickly to the downside. But in this example as well, the Swiss didn't change anything at all, and so this spike to the downside is already equalized and it's currently hovering at the neutral area. Nonetheless, this stricter monetary policy for the US dollar strengthened the US dollar pretty well, and this definitely has an impact to today's market and tomorrow, and we can already see it in the trade signals we got so far. FX volume clearly outlines that the US dollar strength is currently covered by a rising interest in US dollar long positions here from the retail side. So please keep in mind, FX volume displays the information always from the broker side of the trade. So if you buy the US dollar, your broker has to take a sell. And in this case, the retailers are shorting the US dollar, and this is the completely wrong decision. And that's exactly why we display this information from the broker side of you, so you don't have to switch it in your mind. And if the net long for the US dollar increases here, then it's an increase on the broker on the institutional side of the deal, while the retailers are shorting the US dollar like hell. I don't understand why they do so, but that's what it is. And in the FX power analysis, you see the US dollar is strong, and it will probably remain strong for the rest of the day. Moving on to the first trading signals we've got here so far, and there you see the impact of the strong US dollar. We've got an excellent easy scalping entry here for gold against the US dollar, but there is definitely no chance against this upwards dynamic based on the rising interest in the US dollar, and so this trade has already been stopped out. That's part of the deal. We have to take it as is, and this also makes clear that no strategy is perfect. We always have to consider so many aspects before taking a trade, and of course we can be wrong. It's no big deal. It's just important that you are strict with your stop loss and your risk management. So I don't care about this loss. It makes clear there's currently nothing to win against the strengthening dollar, and this reversal ending strategy like the easy scalping tree is probably the wrong one for today. So let's switch to the other trade we've also taken. I'll move this one to the side here. So you see, same scenario here on the gold against the euro. Luckily, euro is a lot weaker than the US dollar, and so this trade has moved a lot to the upside, then was coming down. The stop loss is placed below the last support level, and this trade has more chances to become a winner than the other one, and so I keep it, because once I set the stop loss, this is my final exit, and if it's taken, then it is like it is, and if it goes to the other side, we set our profit target here right below the 80% ATR within these 24, almost 24 days resistance level, and so we keep this position if it hits either this one or this one. We'll see what happens first. Let's move on with our currency overview now to see if there are any new trends to be seen for today. And yes, the Aussie dollar is very, very weak here today. The New Zealand dollar is following in the same direction, while the Japanese yen switched to the strong side, establishing a very healthy uptrend in my opinion. Swiss franc, of course, undecided after the SNB event. US dollar is on the strong side as already discussed. British pound undecided. Please keep in mind, BOE event is coming up. Canadian dollar is neutral, and the euro is on the weak side, but currently short term more in a neutral area, probably due to the correlation with the British pound here. So I don't expect any special moves in the euro before the Bank of England announced how they will continue with the interest rates for the British pound. So that said, the possibly best combination is to buy the Japanese yen against the Aussie dollar and the New Zealand dollar, and I assume both of these combination moved a lot already. So we'll have a look at the corresponding charts. Aussie dollar yen. There we already reached almost 120%. Here reached the 100% ATR target on the downside, and the trend switch happened here. There has been a easy scalping alert to the downside. No, I have to correct myself. This setup would not have triggered the easy scalping alert, and the reason why is that this 1 week strength analysis is too close to the neutral area, so it's unclear if this is really an established trend or not. And there are values in the custom alerts tool which are set to 25 by default, so the easy scalping alerts only execute if this thick line is either above 25 for a buy trend or below minus 25 in a downtrend. So just to explain this as well. Nonetheless, we have a wonderful breakout strategy scenario right now with a double-sided dynamic here, And if you like to know more details about the breakout strategy, I can only recommend having a look at our central Stein Investments page on mql5.com. Check chapter 1, where you can find all our strategies explained in detail, as well as template files to set up your charts as we do. Just to have it complete, I'll check the New Zealand dollar against the Japanese yen as well, and the situation is identical, and this pair already reached 150%. So these are no trading opportunities for us because they already moved a lot, and the potential to move further are pretty limited. If you like, you can go for the next resistance level, but I'm cautious and I'll wait for the next easy scalping alerts we'll get from our monitoring server. Now let's move on with our non-forex analysis, starting with the Bitcoin as usual. And there is currently no real trading setup for us. The Bitcoin is going down against the strong US dollar as well. The situation on oil is also mixed. The long-term trend is going to the downside. Short-term is already in an extreme area, so it dropped from here, and it's quite unclear how this will turn out the next hours. So Dow Jones is clearly going down. There has been built a new resistance level here, and from there you see it's constantly falling. We'll see how this ends in the next hours. And last but not least, the German DAX, showing the same picture. It dropped like a stone without any resistance, passed through all past resistance levels, and the 80% ATR, the 100% ATR, and the 130% ATR. So there is obviously currently nobody that wants to buy the German DAX, and I assume this is also a result of yesterday's news. So this makes once more clear how important it is to check the economic news calendars provided for free on Forex Factory, for example. They are also available on my FXbook and other sources. So I can highly recommend checking these every day to see if there are any upcoming news that might impact your trading ideas, your strategy, or the pairs you want to trade. That said, we are at the end of this video. I wish you all a great day. I hope you kept your money safe, and I'm happy to see you in the next one. Bye bye.